The Nifty is up 25 points odd.
Currently, the benchmark indices are up close to about 0.5%. Well, Nifty 50 had really come up with a gusto, but at the moment is seeing some bit of sluggishness, up close to about 0.25% on the benchmark indices. The mid-caps are cruising along. Things picked up in the last 1 hour. It's a 100-point gain that you can see on the Nifty.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia Shenoy and here are all the top headlines of the day. The Indian equities begin the new year on a firm footing. The sensex and the Nifty gain nearly 1% each, supported by metals and mining counters. Reliance, ICICI, Infosys and HDFC, bad for the bulls. Commercial vehicle sales register a strong rise in December, with auto majors Ashok Leyland and Tata Motors reporting double-digit growth, while strong demand on the back of good Kharif procurement and strong Rabi sowing buoys the tractor sales. India's largest car maker Maruti Suzuki reports a 9% decline in total units sold. Meanwhile, a dip in exports hurts Bajaj Auto and lower high-end bike sales impact Eicher Motors. Metal stocks shine after producers hike prices and global inventory levels hit a low. Analyst commentary that metals prices may have bottomed out boosts sentiment further. SAIL, Hindalco and Tata Steel all clock in gains. And MCX dives 6% after it delays cost reduction plans by extending its IT contract with 63 Moons, while Relige Enterprises gains in trade to close flat after it reports a debt settlement agreement with its lenders. And here's the lineup of what we have for you in the next half hour. It's a packed show today. The market opinion, we have Samir Arora, founder and fund manager at Helios Capital, and Arvind Sanger, managing partner at Geosphere Capital Management. We'll also get you expert opinion from the corporate space from Krishnan ASV of HDFC Securities and Rakesh Sharma of Bajaj Auto. Well, Dalal Street rings in the new year on a positive note. The Nifty and the Sensex gained over 0.5%, but the mid-cap outperformance helped keep the market breadth in favor of the advances. Metal stocks led right from the front. Nigel is here with the day's trading action. Nigel, over to you.
Well, it was a good start to 2023 with the Nifty ending on a winning note. Though volumes were still a little bit lower, so it wasn't really houseful. The mid-cap and the small-cap indices, they started off a little bit better, and the hope is that 2023 will be a far better year for the broader markets in comparison to what the headline index is likely to do. The Nifty Bank, well, it managed to conquer the 20 DMA, which was a bit of a resistance zone, but just about. Now, if we're looking at the indices itself, just take a look at that. The mid-cap and the small-cap indices, both of them did outperform, which is heartening. But there were two sectors that were in focus today. Metal stocks. On optimism of China reopening, you had Hindalco as well as Tata Steel. Both of them were the biggest gainers on the Nifty itself. Jeffries did go ahead and upgrade the stocks, while the smaller names as well did do pretty well. Moil, there was a price increase out there, and SAIL, there's optimism that the entire Ferris pack will see improvement of profitability. That's the hope as of now, but metals did well. Auto stocks on the flip side, they had a mixed reaction to their numbers. Mahindra & Mahindra managed to end mildly higher. Bajaj Auto a little bit cautious on the exports, so that was a little bit lower. But the big winners were from the broader markets. SML Isuzu, the reopening trade is playing out there. Schools, colleges back, so that's why that stock was up 20%, while Atul Auto as well did end higher. There are other big winners. MCX was under pressure in trade today. They've renewed their contract with 63 boards. The hope was that they'll be resorting to a new system which will cut down costs. That didn't happen, so that was under some pressure. NCC won more orders, so that was higher. And from the IT pack itself, Persistent Systems was the big outperformer. The Nifty, not out of the woods yet again, because it needs to conquer that 18,250 to around 18,350. Nonetheless, it was a good start to the year.
Okay, a good start to 2023. In market opinion, Samir Arora, founder and fund manager at Helios Capital, says that India will outperform global markets in 2023. He also expects that US inflation will not be incrementally negative. Take a look.
India itself will also do well in that situation. And if the rest of the world does badly, then we will surely outperform. Overall, I think this year I am starting in my mind on a positive note, because if I see the current issues, mostly related to US inflation and now maybe the COVID in China, the US inflation thing has been going on for quite some time. And in the next 2-3 months, I think by March, they would have finished their hikes and then they would pause for a long time, maybe the whole of this year. But at least it won't be hopefully incrementally negative news. And the China COVID situation, unless it happens to be some variant which is much more scarier than what we have seen, then we have seen this kind of a thing in India and previously in Europe and many other places. Broadly talking about the private sector, this thing, as like HDFC Bank, Kotak Bank, even Axis, ICICI broadly have done very well, even in long term. So yeah, that sector will do well. Also, if you say separately that the risk today is that whether the US problems are completely over, whether the EU problems are over, which means the IT sector, which is facing that market or that economies. So I would think a locally oriented sector, which is financial, is better even from that angle.
All right, in more opinion, Arvind Sanger, managing partner at Geosphere Capital Management, says that the biggest theme to look out for in 2023 is going to be the reopening of China and the impact it would have on global markets. Listen in.
The biggest theme for us in 2023 is going to be the reopening of China. China is having a tsunami, not a wave of COVID right now. The faster it goes through, the quicker it'll come out on the other side, whether that's in February or it's in March or it's at the end of the first quarter. That's going to mean a very bullish outlook for commodities on with China. One of the biggest risks to India is going to be in the second half if metals and energy do get a benefit from China reopening. You could see some, reemergence of inflationary forces in the Indian economy, but we feel good about the overall outlook. The growth outlook is decent, but India is not immune to the fact that the U.S. could go into a recession in 2023. So we are going to be much more selective in how we look at the Indian market in 2023. Emerging markets could outperform in 23. And I think part of it is that, Fed is trying to engineer a slowdown and a recession. And you could have, the largest weight in emerging markets is China.
All right, in corporate opinion, Krishnan ASV, the lead analyst BFSI at HDFC Securities, has said that the banking sector may have exited their growth and added that structurally private banks are still better placed than PSU banks despite the rally.
We might have exited the peak growth, peak margin quarter now. That's our sense. This was probably at about 18% loan growth, 9.5%, 10% deposit growth. Something has got to give. We've generally been heavily leaning on private sector banks. Structurally, obviously, they have certain advantages. The PSU banks had a handicap.
Okay, let's move to the second headline now. Commercial vehicle sales registered a very strong rise in December, with auto majors Ashok Leyland, Tata Motors and Eicher Motors reporting good growth. Tractors also saw a similar surge for the same period on the back of good Kharif procurement and a strong Rabi sowing, which buoyed tractor sales. So let's take a look at these numbers that have come through. For Ashok Leyland, it was very strong sales in December. Total sales went up by 45% year on year. This was largely led by a good jump in the medium and heavy commercial vehicle sales, and the management pointed out that this is also because of a recovery in bus sales. So the total bus segment saw a growth of 108% on a year-on-year basis. In fact, CV sales accelerated even for Tata Motors. So Tata Motors total domestic sales went up by 10%, and within that the MHCV demand was very strong. It was a 34% rise that Tata Motors saw in CV sales, coming in at 10,885 units, and the management did mention that this is because of a recovery that we've seen in cement consumption and infrastructure demand, as well as better fleet utilization. And finally, Eicher Motors as well reported a decent set of numbers in the CV segment. So these are three companies that did well today. But the third headline today is India's largest car maker Maruti Suzuki reported a 9% decline in total units sold. However, the management maintains that retail sales for the month was very good, with the auto major crossing 2.06 lakh units in terms of retail sales. But overall, if you look at the numbers, the domestic sales were down about 10% as well as you saw the, export sales for Maruti have been under pressure. Now, we had a chance to speak to the management as well. They indicated to us that not only have retail sales improved, but they believe that the worst of the export pressure is also now behind us. Take a look.
The retail, though, was very good, and by our estimates, the retails have crossed the 411,000 mark. It's the first time ever in Indian automobile history that retails in 1 month have crossed the 4 lakh figure. Maruti Suzuki's retail in December was pretty good. We actually crossed the 206,000 mark. The current pending bookings almost at 363,000 now.
Retails have declined and we have to manage channel stocks. So shipments were also reduced. But like I had mentioned, we seem to be bottoming out now. The free fall which we were experiencing in the April to June, July period has now sort of leveled off, though it is about 25-30% below the peak levels of last year. Key markets like, let's say, Nigeria, where there is a very important event of the elections, which is looming by end of February. As these things resolve themselves, probably in a couple of quarters, we should start to see some kind of normalcy and upward trend.
Okay, that's the management of Bajaj Auto. Now, the important bit for Bajaj Auto is that exports have been under a lot of pressure. The management, as you heard, has been indicating that it has been a free fall in terms of export sales for the last many months. That's the kind of weakness because of currency devaluation as well as pressure in most markets like Nigeria. But the important bit is the management said that the worst of the free fall is now behind them. And perhaps you could see some improvement. There are the Nigeria elections as well coming up. Post that, maybe there could be some improvement in terms of Bajaj Auto sales. That's not PV sales, that's actually Bajaj Auto doing two-wheeler sales, which has been under a bit of pressure. We'll do one thing, we'll take a quick break on that note, but do stay tuned in. We'll be back in a jiffy with the other headlines. Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we're tracking for you. On the fourth headline today, metal stocks shown in trade after producers hiked prices and global inventory levels hit a low. The sector majors like SAIL, Hindalco and Tata Steel all clocked gains on the news, with analyst commentary on the space pushing stocks higher. Nimesh joins in with more details on that. Nimesh, over to you.
Hi, Sonia. So the entire metal pack is buzzing in trade on the back of the first upgrade for 2023, which is on the metal stock. So Jeffries has upgraded both Tata Steel and Hindalco to buy from hold, and they've raised the target price as well. Jeffries has been cautious in the sector for the last 1 year now, and now at these valuations they've turned positive, and they've raised the target price on Tata Steel to 150 from 95 earlier, and on Hindalco the target price is now raised to 600 versus 390 earlier. Now the key reason for the upgrade is they believe that China has started to ease COVID policies, and they're going to support the ailing property sector, both positive for the Indian steel companies. In terms of numbers, they believe the worst in terms of quarterly margins for the quarter for the Indian steel companies, and in terms of earnings cut for both Tata Steel and Hindalco are both behind. So the worst is in the price, and from here on things are going to improve. In fact, Tata Steel is a preferred bet for them in the metal names, largely on back of attractive valuations plus improving asset footprint and balance sheets. On back of that, a big upgrade in Tata Steel, but they've also upgraded Hindalco to a buy with a target price now to 600 from 390 earlier.
Okay, thanks a lot, Nimesh, for that. Well, the fifth headline today, moving on to the stocks making all the big news. MCX was down 6% after delayed cost reduction plans by extending its IT contract with 63 Moons, while Relige Enterprises gained in trade to close flat after reporting a debt settlement agreement with its lenders. Surbhi is standing by with more on these two. Surbhi, over to you.
Thanks for that. So Relige is gaining traction in today's trading session, but that's because the lenders have approved one-time settlement for outstanding dues for Relige Finvest. Now, Relige Finvest is the NBFC arm of the company. Finvest owes close to 5,344 crores to 16 lenders, including the likes of SBI, Bank of Baroda and Punjab National Bank. And the company has proposed 2,320 crores as one-time settlement, which is close to 57% haircut to the outstanding dues. The management in its press release also said that they've been taking all the corrective measures suggested by the RBI so they can restart their lending business. The management was on our channel earlier, and they've said that 88 to 85% of these dues have already been paid, and the remaining will be paid by end of January. Also, MCX is in focus today. That is because over the weekend that they've announced that it extends its service contract with 63 Moon Technologies for another 6 months. They were supposed to switch to TCS as a service provider, which in turn would reduce their operating costs. Now, Morgan Stanley has written on MCX with a target price of 12.20, which is a downside of close to 20%. They think that the switch to TCS will now not happen until Q2 of FY24, which will increase the cost estimates in the short term. They are valuing MCX at 28 times FY24 PE, whereas currently it is trading at 41 times PE. Also, ICICI Securities have downgraded the stock to an add from a buy rating with a revised target price of 1669 versus an earlier target price of 1795. They say that the new extensions of 6 months is longer than the earlier estimated of 3 months, and that's why they expect the Q3 FY23 EBITDA to be lower by 10% on a sequential basis due to higher software expenses. They value the company at 31 times FY24 PE.
All right, we also caught up with Rashmi Saluja, the executive chairperson of Relicare Enterprises, who said that the company is planning on paying the remaining dues by the end of January and added that the entire haircut amount is not more than 25%. Take a look.
Already paid almost from 80 to 85% dues have already been paid. In fact, we signed the entire agreement with the lenders. 16 lenders we signed on 30th and 31st. Before the end of the day, we paid the lenders almost 85%. So that we have already done. And the remaining also, though we get time, 90 days as per the RBI guidelines, we get 90 days to fulfill the entire settlement. But we are going to complete it in January so that we can really focus on the lending part. When you are actually paying the money upfront, it is a big, source and bonus, and for banks as well. And if you calculate the entire haircut, it is not more than 20-25%.
Meanwhile, state-run mining majors NMDC and MOIL rallied on price hikes. NMDC has raised product prices by 5,000 rupees a ton. Nigel is here with more on both these stocks. Nigel.
Well, that's right. NBC has gone ahead and increased their prices effective January 1st. And on lumps, they've reported that they've increased it by 200 rupees per ton. However, I understand that in various parts of the country, well, it's a little bit higher as well. In some parts of the country, lump prices are high by close to 500 rupees per ton. For fines, well, they have reported that it's up by close to 500 rupees per ton. What are the factors that are playing out? Well, China has been reopening. So that's why, in fact, you've seen that global iron ore prices are up by close to 15% in the past 1 month or so. There have been price hikes that have been implemented by Odisha miners, on iron ore. So it gives them reason to go ahead and increase prices. And also pellet prices, well, that has moved higher big time. So that gives further reason for them to go ahead and increase iron ore prices as well. They've also updated on their sales numbers for the month of December, and that's come in a little bit lower by close to 2% on a year-on-year basis. The other one is MOIL. They as well have two pieces of news coming in there. One is they've increased prices on manganese ore with manganese content of around 44% and higher. That's been increased by around 15%, while with manganese content of less than 44%, it's increased by around 7.5%. Besides that, the December production numbers are very, very good. It's the best ever that they have stated. They've also stated that, in fact, the production number is up by close to 18% in comparison to November, and up by close to 91%, in comparison to November. That's the production and the sales numbers. Put all that together, NMDC and MOIL, both of them did well.
All right, on to a CNBC-TV18 exclusive. The Ministry of Corporate Affairs has granted permission for the demerger of the Shipping Corporation of India. Timsi Jaipuria is here with more on this. Timsi, over to you.
Well, 29 December was the day when Ministry of Corporate Affairs held a meeting to see the proposal of demerger of core and non-core assets of Shipping Corporation of India. Remember, that was a sticking point when it comes to the divestment plans of Shipping Corporation of India. And Ministry of Corporate Affairs, what sources are indicating to us, have granted the permission. In principally, formal orders expected in next 5 to 10 days. This demerger of core and non-core assets will actually pave way for divestment plans of Shipping Corporation of India. Remember, government plans to divest over 63% of its stake in Shipping Corporation of India. And most crucially, this division of core and non-core assets was something that was actually keeping the plans on hold. And now, once the formal orders have get received by Shipping Corporation of India and DIPAM, the proposal can move forward. So another 5 to 10 days is when the formal or written orders will be given by Ministry of Corporate Affairs. That's what sources are indicating. So let's see how soon the formal orders come in and how soon government then begins the plan for divestment. Back to you.
Okay, thanks a lot for that. Well, it was the first trading session of 2023 today, and brokerages have revealed their top stock picks for the year. Vivek is standing by to give us more on that. Vivek.
Thank you so much. So, brokerages, their top picks, their model portfolios, their changes as well as weight increases and decreases. We'll analyze all that, as we step into the fresh year. Now, first up, Jeffries. The main theme for 2023, according to them, is the revival of the domestic economy as well as private capex coming back. The top picks, especially when you're talking about the entire space, is the fact that within the financials, within the banking pack, they like ICICI Bank as well as SBI. Moving on, they actually continue to like, in the property market, they like Godrej Properties as well as DLF. When you're moving on to the auto pack, they like Maruti, they like Tata Motors as well as TVS Motors. Within the space, the FMCG space, they like HUL, GCPL as well as Britannia. And when you're talking about the industrial space, the names that they like are Tata Steel, L&T as well as Container Corporation. On the other hand, some of the sectors that at this point of time they are a little underweight on is IT services, telecom as well as healthcare. Moving on to the mid-cap space, the top picks for Jeffries in the mid-cap space is Thermax, CEMS Info, Prestige Estates, Avasfin, as well as Supreme Petro. And when you're talking about some of the other picks that they like, Embassy, Kajaria, Indian Hotels, Dalmia Bharat, as well as Syngene are some of the other top picks in the mid-cap space. Moving on to the brokerage house IIFL, the large-cap picks that they have, Bharti Airtel, interesting name, SBI Life, NTPC, Bank of Baroda, Interglobe are their top picks. Within the mid-cap space, they like APL Apollo Tubes, Cummins, Apollo Tyres, as well as JB Chemicals. On the other hand, when you're moving on to the small cap space, they like ICRA, they like KIMS, Deepak Fertilizers, Pharma, as well as Equitas SFB that has seen a bit of a re-rating in recent times. Their top sells, however, are Shree Cement, IRCTC, Aarti Industries, Divi Slabs, as well as Wipro. Now, moving on to what Macquarie likes for 2023, it's the top names that they like, with an interesting name, Gale, that they have, as well as TVS Motors. On the other hand, some of the underperform ideas that Macquarie has include names like Bajaj Finance, Jubilant Food Container Corporation, Reliance, as well as Industries. Lastly, we are seeing what Kotak has to say. Kotak, in fact, adds SRF to their model portfolio with a weightage of almost 150 basis points. And these are the stocks where they're trimming a little bit of stake to give that weightage to SRF.
Okay, well, let's move on. Thanks a lot, Vivek, for that. In the pharma space, Piramal Pharma is the next stock on our radar, surging in trade today. Ekta is here to tell us why there was an up move in that stock. Ekta, over to you.
Thanks for that. Well, yes, Piramal Pharma is in focus because the government has initiated an anti-dumping investigation on vitamin A palmitate. So basically, this is an originating in terms of the exports from China's EU, Switzerland. Now, Piramal Pharma stands to benefit because the company is the sole producer of vitamin A in India. We do understand that the company imports the raw vitamin A, processes it and sells it to food as well as consumer companies in India. Now, what has been taking place is that there has been a dumping of the final product of vitamin A in the country, and that was coming in at cheaper prices. So if in case this investigation is successful in putting any kind of anti-dumping duty, it would be positive for Piramal Pharma.
Okay, Ekta, thanks a lot for that. With that, it is curtains down on this edition of Markets Today. Have a great day and thanks a lot for watching.